Hello everyone, this is today's video analysis for September 25th, 2019. Today we're taking a look at the GBPUSD Great British Pound versus the US dollar for today's trade analysis. Let me zoom out one time so we can see some history for this currency pair. Long term, we were in a significant downtrend, even going all the way back to the early parts of this year, February, March. We were all the way up here at the top of the chart into the 133, 1.34 level at the very top of the chart. And then we saw the market turn lower and is pressured to new historic lows all the way down into the 1.19s at the very bottom of the chart. So significant long-term downtrend. In recent weeks, though, we've seen a little bit of a rebound as the market has now turned back higher once again, pressuring from the 1.2 thousand level at the bottom of the chart back into the 124s, 125s inside this black box. A couple of things here also. The moving averages. The 200 is the blue, the 100 period simple moving average is the green. We have recently been challenging all over that 100 period moving average, top of that black box. Let's zoom it in a little bit, take a look at that black box. You look to the right hand side, see the green 100 period moving average. The market's been a little bit above, a little bit below. We're going to zoom in on that black box a little bit more here in a moment. I do want to mention the fact that we've been somewhat range bound between the green shaded area 1.2505, 1.2525, the green zone, blue zone 124.25, 124.05. And we're challenging that today, and that's the crux of today's analysis, is that we're challenging that blue zone and potentially breaking out of this range, to the downside. If it does, we could be looking for the market to pressure lower and back into the 123s or even as deep as the 122 level if the market becomes motivated to go lower. Look back to the left-hand side black box, and you can see similar scenario back here. It was bouncing around between the green, orange, and blue zone. Eventually broke to the bottom side and made those new historic lows. So some interesting historical references back here on the left that help us identify this area on the right. One last thing, Fibonacci from the lowest low on the chart all the way down to the bottom of that spike to the most recent resistance spike into the 125.85 level puts the 236 at 124.35. We're just underneath that now. 382 of that, let me just put an arrow right here at 123.44. So if the market continues to go down, that would be a pretty decent target to shoot for. 618 of this range also sits way down here at the purple shaded area back into the 122 level. So that's why I say those are pretty decent targets if the market continues to break lower. It doesn't have to continue to break lower, just if it does. Those are the areas that we would look for the market to shoot for as the next areas of support. Let's go ahead and take it on down to the 4-hour time frame. Look at this. We studied this in the trade room over the past couple of days. These blue lines that you see here. Blue lines, resistance, resistance, resistance. Poked its head above it one time, came back under, resistance, and resistance. Speaking of head, we've been discussing this somewhat as a head and shoulders reversal pattern. Head and shoulders showing the shoulder level along the double blue lines. The head up here, of course, at the highest high on the chart. So if that's true, if that becomes true, then we're looking for the breakdown of the blue shaded area to become the next opportunity to trade the GBPUSD on a breakout of that head and shoulders pattern lower. So isn't that interesting? So if you were in the trade room and decide to go short up here into the 124.80 level, you're into significant profit now. You should be protecting that profit if you went short at the shoulder level of what this could be a head and shoulders pattern. If you didn't go short there, I think we're now looking for the breakout setup underneath the blue shaded area. The breakout setup would be we're looking for a candle to get underneath. Let's make that red. And often with a breakout setup, we're going to look for the market to rebound. Breakout first, rebound, touch it as resistance underneath that blue zone before going back down. That's going to give us lower risk and a higher reward because at that point our risk is it breaks back above the blue zone. So we want to limit our risk by selling as it bounces back into the blue zone and look for higher profit as it would continue to go lower. It does not have to do this. We always want to be sure that we're not falling prey to the false breakup because the next current candle or even the next candle could suddenly turn into a bullish candle and get right back above there. And I can give you a great example of that right here. So we're trying not to have this happen to us. What happened there at the blue circle, where it got underneath and everybody's getting happy that it was going to break back underneath. The next candle turns right back around and goes back up. So let's not let that happen to us. So how do we do that? We wait for the full candle body underneath on the 4-hour time frame at least to get underneath the 124 level. And that gives us higher confidence that it's going to continue to go lower for the pound dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.